Welcome, everybody. The Brain Trust is back because it is Tesla earnings day, and we just need to find another way to be disappointed by our good friend Elon Musk. So, JR, Derrick, how are you doing today?
Awesome.
Doing well. How you doing?
I'm a little anxious. I feel like Elon is my bad boyfriend. I just can't seem to give up. I cannot seem to just get away from him. I own the stock. So obviously that is the topic of discussion today. And just so we're clear, this is not actually Elon Musk. Compliance said I need to say that this is not really Elon Musk. Elon Musk has nothing to do with this event. And Sammy Abusad will not join us today. Sammy will be back next week. Sammy's busy with his open house and his schedule's crazy. So we miss you, Sammy. We hope you're watching. And okay, today, obviously, we're going to talk about Tesla earnings. We're going to talk a little bit about how Derrick and JR find their best trades. And they're going to give their favorite names, the stocks they love, the stocks they hate. So let's start with two truths and a lie, because this is everybody's favorite part of the show. Derrick is the season champion, though Sammy was the champion last week. So how this works, very simple. We're going to make three statements. One of them is a lie, and try to guess the lie. And of course, today's theme is Elon Musk. JR, are you okay there? Are you paying attention?
I'm great.
All right, excellent. Thank you, JR. Okay, all right, everybody. We need to pick the lie on the screen. Number one, Elon is the president of the Musk Foundation. Number two, Elon has a master's degree in material science from Stanford. Number three, Elon co-founded OpenAI. Anybody in the audience, feel free to type the number of the chat. Which one of these is a lie?
I'm gonna guess number one, but I don't follow Elon Musk closely enough to know any of that. I'm pretty sure he co-founded OpenAI or was involved in it, but I'm just gonna guess number one. Why would he be president of a foundation with his last name on it?
JR?
I'm going to say two. We'll see.
Oh my God, I cannot believe it. JR is the champion today. Elon,
Look at that.
He was accepted to Stanford, but he did not enroll. And our friend in the audience, TSLSX, is the people's champion. Our friend Amy Vaughn over on YouTube also got it right. Okay, so let's talk about this mess we call Tesla. And I'm long Tesla, but I'm going to talk a lot of crap because it's been endlessly aggravating stock. So the robo-taxi event sucked. The delivery numbers were awful. Not awful, they were bad. Worst stock in Mag 7 year to date. Analysts hate the stock, so there's 12 sell ratings on Tesla. It's at least for stocks in the QQQ, it's the stock analysts are most bearish on. So Derrick, I know you, as of this morning at least, I saw you were short Tesla. You've been critical of Tesla and Elon as of late with all these news events. So what is your take on the stock going into earnings today?
I'm short Tesla. I've been short Tesla. It seems like it's somewhat of an unpopular opinion when I speak to people. I was short Tesla last week also when we had our Brain Trust event, and it didn't seem like Sammy and JR liked my position too much on it. But I like my position on it. The ADMA is caught up. This thing has not been able to have a buyer in sight ever since that event. I'm going to hold it into the earnings report because it's a small position and up a lot. I'm up a lot in it, and that's how I trade. The way that I trade is I really like to be greedy with the money that I've already made. So I'm up a lot in it. If it, gaps up to 240 or something crazy on this earnings report, I'll still be up in my trade. And of course, if it, sells off further, then I'll be in an even better situation. So you never know what's going to happen on an earnings report. It's always to some degree a gamble. But my thought process, I really think so. One of the things that I've mentioned is I think that the stock is very, very overvalued when you compare it to like a GM or a Toyota. And the refute against my comment there is, well, it's been that way for years and years and years and years. What changes now? What makes it different now? Well, the reason why it's been able to maintain such an incredibly high valuation is because of the cult of Elon Musk. It's because he's done such a great job creating this story of artificial intelligence and robotics, and that we're more than just a car company. And Elon Musk is the not really a superhero movie guy, but what's the name of the one guy that Robert Downey Jr. played?
Tony Stark.
Tony Stark. That Elon Musk is, Tony Stark and all this stuff. And I almost feel like that bubble is maybe finally starting to burst when you hit this robotaxi event, where he can't be pinpointed on a date where that's going to become an actual thing. It just seems like a concept car, in the same way that if you go to any auto show, every company has their concept car that never actually becomes a reality. There is no app or whatever that everybody was looking for to be able to send out your robo taxi into the world to have it work for you while you sleep. And then I don't know if this is true or not, but I've seen on social media a lot of these rumors that even the robots that were at the event were actually being controlled by like human beings that were like hiding in the bushes or whatever to control those robots, as opposed to them really being like these AI awesome, super cool robots that they kind of initially appeared to be. You combine that with, I don't want to get into politics, but I think that politics generally is bad business. You combine that with what he's doing politically, which, you know, traditionally the people that are most interested in like electric vehicles and saving the planet and things like that are on the left, and he's coming in on the right. So he's alienating his base. I think that the cult of Elon Musk is imploding a little bit when he can't deliver on this AI and robotaxi stuff. So it just makes me very bearish that at we're finally maybe working to the point where valuation reality can come together on Tesla after it being at an insane valuation for just years and years and years. I mean, Toyota is doing great. General Motors is doing great. That last earnings report it just had yesterday was great. But these companies are nowhere near the valuation of where Tesla is. So, you know, I'm sticking to the short. I'm a believer in technicals, though, so the technicals have to confirm that. And I think that the technicals are confirming it, at least as of right now. But we'll see what happens with earnings.
Yeah. Okay. So JR, so Tesla, I agree with Derrick that there is a sort of pie in the sky element to Tesla where they get tens or hundreds of billions of dollars worth of valuation are attributed to like unnamed awesome stuff that's just going to happen in the future.
It's
So
absurd. Yes, it's totally absurd. I agree with Derrick completely. It doesn't mean it's not going to go higher.
yeah. Okay. So do you think there are parallels to Amazon? Because I think like 15, 20 years ago, Amazon has always had this sort of premium valuation because people can assume amazing things 20, 30, 40 years in the future. But so JR, do you think it's sustainable for Tesla? Because it feels like Elon promises, and he just it never lives up. I mean, those robots look like they're going to murder you if you have one in your house, like they're straight out of a movie. So do you think
Elon? That's what I
might...
say every day when I look at it at one of those weirdo, Android things. Yeah, we're all going to die at the hands of Tesla, most likely. Yeah.
Okay. So all right, but you said, of course, stocks can go up or down for any reason. So what do you actually think of it into earnings? Do you just want to stay away from it?
I'll probably short the earnings report once it's going. So just to clarify, I didn't disagree with Derrick's position of being short Tesla at all, and I've been shorting it very actively intraday on most days. I think what I was saying is that Tesla's in the middle of a range, and to me, longer term, it looks like it's very likely a reaccumulative range. But no, I certainly understand the logic behind Derrick's trade, and it makes total sense to me. As far as one of the things that drives me crazy is Elon's political pandering. If he was in the business of, it's just you're in the business of selling to a particular political demographic, and you're basically at odds with them. And if he was in the business of selling chewing tobacco and truck nuts, maybe it will go a little smoother, but he's not, right? So it's bad business for sure.
Okay, so do you think there's heightened risk with the election because he's had a terrible relationship with the Biden administration? Like Tesla doesn't get invited to electric vehicle summits. So if Harris wins, does the stock just crash?
There's a lot of investors who are concerned about political lawfare against Elon, and we've certainly seen a higher legal and compliance related scrutiny against Elon Musk than we've seen against other tech moguls. So that's very, very likely. What I'm looking at in terms of earnings is the robo-taxi event, in my opinion, was the crack in the foundation as far as the price action for the next few weeks. And I think that this earnings report for them it's a minefield. They have so many questions, so many I's they need to dot and T's they have to cross, that the likelihood of Tesla going higher after this earnings report to me seems very, very low. I'm really bearish into this report. I think they're going, between concerns about margins and EBITDA and concerns about their robo-taxi release. You just have way too many open questions, and the likelihood of them not scaring away already skittish investors is very low. Now, you have mega bulls. I think Gary Black said, Tesla is Amazon in 1999. That has yet to be seen. I'm not so sure. We'll see. I am bullish long-term Tesla, but I'm not sure that it's going to be Amazon.
Okay, so could you go very quickly? Why are you very bullish long-term?
Because they do dominate the EV market, and I think that the fleets and ride-sharing services are going to be long-term successful, and I think that they have a bright future in robotics and automation. I'm not sure that they're ever going to live up to their valuation, but it doesn't seem to matter, right? As long as they have bullish momentum supporting their outrageous valuation, the stock is going to continue to go higher. So as a technician, I'm more worried about the chart than I am about the fundamentals.
Okay, guys. Okay, so just clear for the audience, both Derrick and JR are bearish heading into this earnings report, regardless of what might happen long term. The near term setup looks like garbage. Okay, so let's
gonna rip.
Yeah, I will. I mean, the interesting thing is, like, I don't see anybody coming up with a reason to buy Tesla right now. So maybe that's the reason to buy it. I mean, who knows? Okay, so let's step back a little bit. I want to talk a little bit about more of both of your guys' philosophy on what a good trade to you actually looks like. With Tesla, obviously, it's a situation where it looks like expectations are low, but perhaps not low enough heading into pivotal news. So, Derrick, we'll start with you. It's generally speaking, what does an ideal trade look for to you?
So trading comes down to risk, reward, and probability of success at the end of the day, regardless of what your trading approach is. Risk reward is relatively simple math, and you've got plenty of different ways that you can compute that, but you got to make sure that the risk reward is appropriate. Probability of success is the more difficult dynamic aspect of things, because there are so many different influencing factors that will impact any trade that you're getting involved in. I call the term that I use for all those influencing factors is called the layers of probability. So every time I'm getting involved in a trade, I'm measuring the risk reward, but I'm also trying to analyze these more dynamic factors that influence my probability of success. There are some of these factors that I think are fairly ubiquitous that can be analyzed for almost any trade that you're getting involved in. And then on top of that, there's a ton of one-offs. So some examples, the market. Very simply put, if I'm looking to go long a stock and the market is strong and the market's trending higher and the market's breaking out, I will have a higher probability of success than if I am trying to short a stock when the S&P and the NASDAQ are ripping higher. Other layers of probability, relative strength and relative weakness. One of the big things I'm analyzing every day, like I was looking to see if the SPYs and Qs could break lower today, they did. But then in the morning meeting that I did with my team in the virtual trading floor this morning, I was like looking through most of these magnificent 7 stocks to see which ones were relatively weak yesterday, which ones were relatively weak pre-market, so that if the market were to break yesterday's lows and trigger some downside follow through, then I could go after relative weakness because I'm going to get better bang for my buck. Time of day is important. Middle of the day, the market tends to be choppy and go sideways oftentimes. The morning is more that price discovery period. So depending on the type of trader you are and type of trading strategies that you implement, you may find that you have better risk reward and therefore higher and as well higher probability of success trading off the open. Other one-off things that I pay attention to are related to market structure. They're also related to option flow. Has there been consistent bullish or bearish option flow that's coming into this market? Is there like a gamma squeeze higher because there are constant calls coming into the market that large participants are coming in and buying? I don't want to jump in front of a gamma squeeze when I'm seeing consistent option flow come in. That's more of like an example of a one-off. So for me, when I'm trying to find the ideal trade as you describe it, or I like to use like a grading system. So I would describe it as like an A+ trade. That's the trade where all the stars align. I have a way to be able to enter this trade where my risk on the trade is relatively low compared to what the reward profile is. And all of these different layers of probability that I want to pay attention to are all on the side of my trade at the same time. That's going to be a trade that I'm going to want to enter with more maximum style risk than something that has, some things are for it, some things are against it. The risk reward looks okay. Like maybe I'll still take that, B- setup, but I'm not going to be doing it with like maximum risk. I'm not going to risk my day on that trade.
Okay, JR, I'll turn it to you. So what does a good trade look like to you?
Well, I mean, as usual, Derrick's already said all the intelligent things. I mean, I have a very similar approach. It all boils down to expected value, right? So what probabilistically can you expect out of this trade technically? And then I have a top-down approach. So risk-reward probability is I call them the three amigos for short, right? And then I have a very top-down approach. So always market structure first, right? Are we in some kind of accumulation or distribution? Are we in a markup or markdown in the market? What does general order flow look like in the particular index I'm trading in? What is the relative theme in the market? And for example, so when we had the small nuclear reactor stocks going, right, that was a theme that ran for several days, and it was just a matter of coming back and robbing that train every day. So GEX is really important. Gamma exposure I look at a lot, and then multi-time frame analysis is essential. So quite a few things. For me, it's a totality of elements. So looking at market structure, order flow, really, really important. Volume price analysis. Where is the most amount of liquidity likely to be based on past orders? Where are there stuck buyers and sellers? Where are you most likely going to really catch a bid sustainably, given all those other factors, and then really looking at the theme and relationships in the market. So that's all really important to me.
Okay, so JR, is there anything you think the average trader isn't looking at that they should?
So the average trader is not a good money or risk manager, which is probably outside of recognizing what the market is doing and understanding the general market dynamics technically and sentiment and sector strength and relative strength. The most important thing, and this is not sexy, but I say this every day, is understanding how to risk and manage money. So having a tiering system that works in a money management strategy and risk management strategy that's going to minimize your losses and maximize your wins is essential. This morning, I had like 3 losers in a row and still managed to eke out a green day because I really pushed the envelope on the trades that were winning and cut my losses early on trades that weren't working. And that takes some skill, right? Managing money and risk is a skill that needs to be developed over time, and it's rather difficult for most novice traders.
Okay, yeah. So risk management is a very important topic, but I want to kind of flip that topic on its head, because I think people talk about risk management in terms of knowing when you're taking too much risk. So, Derrick, is there ever a time where you think you should be taking more risk? Is there ever a time where you ever think to yourself, I should be taking more risk right now?
Yes. First, I just want to say off what JR said. I love working with JR and with Sammy too, because a lot of the times we have developed, very similar concepts and approaches, but these guys just have way cooler names to describe things. the Three Amigos, the gas station sushi. I mean, this is awesome. I need to steal all these terms for when I'm describing the same things, so that I can describe it in a much more colorful way. But risk management is paramount in the business. I say it all the time. I've been managing other professional traders in addition to my own trading for over 10 years. The number one reason by far why people do not succeed in this business is because of risk management. Next is the reward maximization side of it. And I think when you're talking about reward maximization, that also means that you have to make sure that you're taking enough risk as well. Are there ever times when I look at a trade and I'm like, wow, I probably wasn't as big on that trade as I shoulda, coulda, woulda been? Sure. The shoulda, coulda, woulda game is a very dangerous game. I think it leads to bad trading psychology. What you want to do is take your trade per the game plan that you created for that trade. Then when the trade is over, when the day is done, re-review if you had actually established a good game plan for that trade to begin with. Was your sizing right? Was your risk management approach right? Was your reward maximization approach right on that trade? And then you can make adjustments moving forward. And generally that should not, it can be based off of one trade, but it should probably be based more on a series of trades as you analyze your entire approach as a whole. Speaking for myself, I from a risk perspective, it's probably more often that I get myself a little bit bigger and heavier than I should be, than I'm lighter than I should be. That's me personally. I definitely see people who are sometimes on the other side of that. As a secondary thing to the number one reason why traders fail, which is because of a failure to manage risk properly. I do occasionally see people who do not succeed in this business because they're afraid of putting on risk and they're afraid of making money, which is the crazy one. And this also goes back to trading psychology. But there are traders that I've seen over the years who, maybe they're even decent risk managers, but as soon as they see that they're in the money, as soon as they see that there's green on the screen, they're immediately liquidating that position for a gain. And there's a common saying in trading that I completely disagree with, which is that you don't go broke taking profits. I actually think that you can go broke taking profits, because if you're instantly taking your profits so quickly that the reward is never maximized per the risk that you're putting on, you're not going to be able to make money in the long run doing that way, and you're not going to be a trader who's probably going to blow up in like some fantastic way and magically blow up their entire account off of one trade where they got too crazy. But you're just going to die like the death of 1,000 cuts, because you'll always be able to be there, even if you manage that risk well, for the downside when your trades fail. But then you're immediately liquidating positions as soon as you see some green P&L, and you're never having that day or that trade where you really make 5, 10, or 25x what you were risking, and therefore you don't be consistently profitable as a trader.
Okay, all right. So I think that this topic of reward maximization is very interesting. So JR, for you, like, this is going to get a little bit, we're definitely going down like the nerdy mathematical side, but like in terms of like your overall success as a trader, like the very biggest trades, like how much of your success is dependent upon like those, like the biggest winners?
So I'm highly discretionary. When there are big opportunities in the market, I take them with size. But my job isn't to hit home runs; it's to hit base hits day in and day out. And so there's a lot of traders who make all their money for the year on one or two good ideas. That's typically not my cup of tea. I like to create steady income, and then when really good opportunities come into the market with really high expected value, low risk, lots of upside, then yes, I'll take risks if they're worth the reward. But I'm highly discretionary in that regard. And just to add to what Derrick was saying, which is 100% correct, is I think the reason why traders fail to really minimize downside and maximize upside through proper money management and adding risk is because a lot of them are so obsessed with being correct that they're really trading their own emotions, and they're trading their own quest for emotional homeostasis than they really are to actually trade as a business, right? You have to be really okay with taking a loss and being wrong, and exiting that situation quickly, knowing full well that you're going to capitalize on the opportunities where you're correct and really hit the gas pedal as soon as your idea comes to fruition, and really maximizing the times you're correct. Because oftentimes I'm correct maybe 20-30% of the time, but I have really nice profits to show for it. But if you're trading against your own insecurities and your own quest to just be emotionally whole, right? You're gonna engage in behaviors like taking profits as soon as you see green on the screen, which is something I talk to my traders about all the time. I have like at least one weekly rant about this topic because I see traders turning 5, 15, 20-minute scalps into long-term investments for some reason. You know who you are. And then, as soon as they catch 25 cents on NVIDIA, they're cracking open a champagne bottle and hitting the sell button. And that is the number one way that traders get chewed out of the market, in my opinion.
Well, we all know that it's not a loss until you sell.
Okay.
No. Okay. All right, guys. I think that's a good note for us to end on. But before we go, I want to know what you guys are looking at, what you like here, what you don't like. We'll start with you, Derrick.
Sure. I hate to continue to be a broken record, but I'm still very nervous about this market. I feel like I'm looking at warning signals all over the place, yet a market until maybe possibly today, we'll see how we close, a market that just has refused to break. The move in the dollar over the course of October is insane, and it has had no impact at all on the S&P. The move in interest rates over the course of the last, starting from mid-September, basically from when the Fed did that cut to, where we are today with the S&P just, sitting there at highs and doing nothing is insane. The VIX trading between 18 and 21 with the market not moving intraday and sitting at highs is insane. Then finally, maybe some more technical confirmation really began, I think, on October 15th with that ASML day, where we had that big, nasty negative Maribozu for the Qs, kind of a bearish engulfing candle. It didn't break the trend. The bullish trend is still intact. But that was like another, like I call it a day to take notice of. It may lead, doesn't have to, it may lead to something more. But then the really interesting thing was, since then, the market has had a couple major opportunities to save itself. We had that Taiwan Semiconductor earnings report come out. That was phenomenal. It should have, could have, and to some degree even did, when you look at NVIDIA, saved the entire NASDAQ, saved the entire market. Yet that day we also gapped up and closed on lows. Then Friday of last week, Netflix comes out. The report's phenomenal. Netflix has a great upside move on it. Yet the Qs kind of have a very tight, boring inside day. We haven't been able to break out when I would almost argue that we should have, given those events. And I'm looking at these other warning signals at the same time. Finally here today, again, we'll see how we close. This market has been so resilient. There was 2 trading sessions ago when we were at lows. I was thinking the same thing, like, oh, the NASDAQ looks terrible. It's finally ready to break. And then we rebounded and kind of closed well. And NVIDIA through 140 is what saved the market that day. But maybe finally today, if we actually close weak, we're starting to lose some of these support levels. This 491 area with the Qs. We're testing the 21 EMA on the daily chart right now as I'm speaking. For the SPYs, 574.50 is hugely important, and SPX 5700 is really important. I think if you lose SPX 5700, then that will begin to trigger more selling from the systematic funds that are out there. So I'm just looking at all these warning signals. I've been very heavy short the Qs, even right now as we're pulling down. My short and my Qs is my biggest position. I do have longs on at the same time that are offsetting that to some degree. So I don't want to sound like a broken record. That's the biggest thing that I'm watching super closely. But I also want to reiterate, I almost feel like, because I've been talking this way for like a week or two now, people are starting to associate me as being like a bear or a perma bear. I am not that at all. If anyone knows me well or have been trading with me for a long time, they know I tend to be the opposite. I tend to be a very optimistic, overly bullish person. And I do think that if we get a real break lower, that it leads to a buying opportunity into the end of the year. And that is, I would love that honestly more than anything, because if we could get a real break lower, I could come in, scoop up some companies that I like, and then see if we can get this move higher into the end of the year. I think that November, December has a lot of potential to just be really bullish, and you're going to get the buybacks that come back into the market in a big way in November as well. And then, maybe come mid-January, we begin looking for some warning signals again. But finally, this market is starting to break a little bit. I've been really able to take advantage of it today. I hope other people have as well. But that's really where my focus is right now.
Yeah. Okay. So Derrick short the Qs. He should be happy. We just saw Apple is taking a dump because there's chatter about a big cut in iPhone orders. So I'm sure Derrick will be very, very happy once we're done with this call. Okay, JR, what do you like here? What do you hate?
I still think we get a Bitcoin rally. It's the Donald Trump play. The more his polls increase in popularity, I think the more we're going to see a potential move through 72,000. Technically, I'm seeing the same thing Derrick is seeing. The bond traders are putting a hurting on this market. The 10-year yield over 4, not helping matters, and the DXY, the dollar index, just ate right through that daily 200-day moving average, and it's continuing to rally higher. So we have pressure from all sides. What I'm seeing and what I've been telling my room is that you have what I believe is going to happen. I feel like I get this. I've seen this movie before. Is you have the Qs in a sort of bearish rising wedge. I know we're obviously in an hourly, 4-hour, 8-hour uptrend, but you have this rising wedge reversal potentially apexing into NDX. What is that? 20,700, that we could have a 5-10% pullback into that potential double top. The SPX, you've got the top of value there with a perfect confluence on the 21-day moving average around 57.80, and that would be a place for bulls to defend the S&P 500. If we can't hold that level, I agree. there's a bigger downside move coming.
Okay, folks, beware. There is potential for gas station sushi for Thanksgiving for everybody. So with that,
all around.
All right, we'll be back with JR, Derrick, and Sammy is coming back next week. Everybody have a wonderful day, and if you're long Tesla like me, I don't know what to tell you. Bye, everybody.